Hello traders, this is Alex with the COTlive.com website. Welcome to my website. This right here you see on the screen is kind of my ag part that I do. I'm more of an ag guy. Goes through the COT, the Commitment of Traders data from the government. And I do this every week if I have time. But of course I also do a WD Gann site, which is free. All the stuff on here is free. If you interested in learning about WD Gann, the first lesson's free, and that's part of what we're going to go over today. I'm going to kind of do a deep dive on IBM, and we're going to actually apply the 2-day trendline indicator to IBM. Now, IBM's kind of special in my opinion because of the AI that's coming out. They've been pretty quiet. They haven't made a new high since 2013. So I think IBM's, again, I don't know anything fundamentally, right? So I'm just kind of bullshitting you here, but I think IBM looks right. The action here of the last few days looks pretty bullish. If the stock market doesn't break, it's going to be because of companies like IBM and probably Tesla, right? Tesla's basically not a car manufacturer; it's a robot and a battery manufacturer. You know, those companies I think will continue to be strong. Of course, there'll be some outliers that really have the big moves, kind of like Apple did back, several decades ago. But anyway, this is the website. You can go through and click these. We're going to go over the Apple chart first. Let me get it set up. Here is a monthly chart on IBM, and this is the data points we'll be using on our deep dive. And again, I don't know if this is accurate. This is from bar chart. I'm assuming it's fairly accurate. This low is pretty key, and you can see it's 2013 since we made our all-time high. This low was a dive bomber, cleaner, and the end result was up again today. So let me set up this a little bit. We went to the master chart calculator and inputted those major swings. And these are the swings we took. The low, August 16th, 1993. The high of March 15th, 2013. The low, current last low, March 23rd. The COVID low, basically, 90.56. And then we also did, with this master chart calculator program, there's some other things that you can use, and we did input some of those. You can do, this is the master chart number 2. This is the doubler, right? I took the all-time low, divided it by 10, right, basically. So I inputted 1.016 in the center cell, and it doubles every time, right? So again, you can see here's 1.06. Let me blow it up a little bit. And then it goes 1 point. Now again, a lot of people put 0 or 1 in the master chart. I like to put a lows in there. I mean, I have those squares and nines memorized, right? Now, these are the odd squares. These are the even squares. And it keeps going around and doubling. Now, of course, the same thing can be, you can put time in the middle. All right, here's that data point, and it goes around 1 point whatever, 1.6 every time, every box, right? These are the odd squares, these are the even squares, and of course the angles that are associated with that. So that's how we set that up. These are the 4 inputs that we use. Now we also did one other one. Since IBM had a high a while ago, I took that and again, you can't use the current high, right? Because you only be looking back at the history. So I doubled it, which I got a little calculator here. This is the date, and 2159. I put 4318, right? Doubles it. Now again, I multiplied it times an extra zero. Anyway, 4318, and that puts the projected high, doubling the current all-time high, basically January 9th, 2025. So I plug that in, and it runs it down. And this is the low area that we had, or the all-time high area actually. So that's kind of the flat plateau. So anyway, this goes down. Now again, these, as time progresses, will have quicker. The speed gets slower, but the dates get faster. And on a regular master chart, it's the opposite, right? It gets faster on out, and the dates get slower or further between because it takes longer, right, to get in between those. So that's kind of how this works, right? It gets faster and faster as it goes out, but the dates get further apart. So you have less dates as you get closer, or more dates as it gets closer to the deal. So anyway, those are the 4 inputs that we used. And I saved these on my little sheet here. Again, you can see I've got some other ones already plotted there. And I created an IBM folder. I won't go through all the inputs. This is the end result. You can watch several videos I've done on how I use the master chart program. Try to keep this video a little short. Again, I copied all the inputs I put in. And this is the end result of the advanced sort. And again, by clicking, once you have everything plugged in, you click advanced sort, and this is what it comes up with, right? I copied basically these data points. Again, I always like to leave 1 year of research and 2 years of out in the future. So that's those. These are the actual inputs, and I save those. So again, let's say a couple years down the road, I want to add, let's say we made a new all-time high and it dropped a lot or whatever. I can add that in here, and all I have to do is copy paste these into my research folder, and then just add the other one, right? So I don't have to redo it all the time. So anyway, we got those, and I also put the square of the range, just a few of them. This is the square of the range calculator, the Excel, the WD Gann one. And again, basically it's taken using mathematical squares, right? 1 to 1. Now this isn't a mathematical one, but this will give you an idea. That ain't what I wanted. Again, this is Instance software, very good program. And you can see these are the range divided by 8s. Now again, it's not a 1 to 1, but it gives you an idea how it works. And that's what we're doing in the Excel program, where I can, again, I want accumulation. So I'm adding that to that. And these are the inputs I put in. Let's go to the historical inputs. You can see these are the IBM ones I put in. And these are, when I'm all said and done, I click the advanced listing, and this is what it spits out all the way out in the future. So anyway, that's part of my data point selection. And I did copy them over to this window to make them a little easier to plot on my chart. And I like to save it, right, for my own, future reference points. So again, we're just going back to October. Now I'm going to take a second here and plot them onto the chart. All these data points, right? These, anything that's current from October on. And again, these data points, October on, and then into January. Today is January 22nd at about 10 o'clock in the morning. So I'll plot a few of these as well, right? So anyway, let me get the chart up, and then I'm going to overlay that with the Gann 2-day trendline indicator to kind of show you how that works as well. And really the most important, the only trading platform Gann ever had was a 2-day trendline indicator. The master chart's not a trading platform. The Excel range calculator and all the stuff isn't a trading platform, a program, right? The only program platform that Gann used was a 2-day trendline indicator, and he never violated the 2-day trendline indicator. He might have had a projected low, right? A bunch of stuff coming in, and it probably was a low, but he would wait to make sure the 2-day trendline indicator went long, and then he maybe started his pyramid, right? Or maybe he implemented a buy or sell. So, but the 2-day trendline indicator was his emphasis to get in or to get out, and to now maybe getting out not so much, but getting in for sure, right? He made sure that he wasn't fighting the professionals in the long-term trend. All right, hang with me. Okay, I plugged all those data points in. I used little periods or dots to represent the master chart time frame, and then I used X's for the square of the range, and then of course we're drawing this 2-day trendline indicator, and we'll go through October to current just to give you an example how it works and the importance of it, really. So anyway, you can see we had a again, you don't start drawing a trend line down until it has at least 2 days of higher highs and higher lows, 2 consecutive days of higher highs and higher lows. So you would have drawn it from here to here, right? And this is up to the low. This is our first square of the range. Now again, the trend is down, and the X, which is the square of the range calculator data point, right? I put it over that high. Now again, we've had an inside day, 1 day up, and an inside day. So we had no 2 days consecutive so far. Now that's a 1 day up, and you can see that this is we had 2 here. So again, kind of important, right? It's had a pretty deep dive down into the low. And again, we had a 1 day up, an inside day, 1 day up, an outside day up. Again, so no 2 days consecutive. Another inside day. So again, it's struggling, right? It's trying to go up, but yet it can't have at least 2 days up in a row of higher highs and higher lows. That seems odd. All right, there's 1 day up. And again, looks kind of friendly, like potential bottom, but yet the 2-day trend line indicator hasn't even gone up yet. Another inside day, so it's going to have to take 2 more days. There's 1 day down, and they gave up. So it makes a lot of sense. So again, the trend did not go up at all, and now we can draw down our new trend line representing that. Again, this wasn't even a swing. So again, it makes sense, right? The market struggled, couldn't even make 2 days higher highs and higher lows, and then somebody goes, "Oh frick, I'm screwed," and they poof, bail out. Now we had timing in here on this gap, which I like gaps. I think they're more important than outside days for sure. So we made an inside day, again, not even a higher low, or lower high and lower low. We made here the outside days a lower high, or higher high and a lower low. So once again, we're starting at 0. An inside day, there's our first day down. So we have 1 day down. We have 2 days down. So again, the trend is still down. This isn't even a swing yet. And we made 2 consecutive days down in new lows. So we draw our trend line over. Again, 1 day up. There's our first time we had 2 days up, and we had timing in here. Pretty good one, right? 4 of them, 1 each day. So we get to actually draw a blue line up now. So whatever high, whatever it does, and that's the end result, right? A gap up the next day. That makes sense. It's the first time that it's had something consecutive, and and it wasn't even a weekend, right? It was the 25th to 26th. It just gapped up because of the pressure that it finally did something positive. makes sense. So we can now draw our line up here. Now again, this wasn't a swing. So this is what I call dead stock, right? I mean, this is where the stops would be, and the prey was put stops here, and the predators pushed it up to that area. We had another day up, a lower high and lower low. An inside day. We had timing on this as well, and then again, if you don't have the money to trade these larger swings, right, you got to use these to put your stops, right? I mean, this one we back here, right? We had two here, nothing here on the low. We had two here, right? I mean, your stops at minimum. Or if you're into options like I am, I would have bought calls down here against my short positions if I was a true bear. Now I'm kind of bullish IBM in my thought, so I'd be looking for places to buy, right? So I probably would have been buying on this day with some options personally. And you can see we had, again, an inside day, an outside day. Here's two more consecutive days up. I won't draw a new line. I'll just keep doing it like this. Now, again, if you're doing it day by day, you'd be, pretty important. Now, we had three things coming in here, two master charts and one Excel range calculator. So pretty key. It gapped higher, right? So definitely an important gap and deserving of these three. So if you don't have a whole lot of cash, right, you might put stops somewhere down here or buy 146 puts or something, right, in case it's a high. It did continue higher. I don't know what that dot, I'm assuming it goes over here. So there was our end result from that gap and timing. Now we had another master chart timing here, and it was an outside day, so you take note. Now again, I still think stops are underneath here. We haven't had any really 2 days down in a little bit. Now again, we had 1 day down. That was an outside day, so that was the starting point, the 0 day, the insertion day, and this is only 1 day down, 1 day up. So far, no 2 days consecutive, an inside day, a new high. And that's our first time we've had 2 days of higher highs and higher lows. So we can draw it and continue it. Again, all these gaps, and this one was timing, but this one was a gap, so kind of important to me. A new higher high here, right? So we can continue with the blue line, which is an uptrend. Another day up. This was an outside day. This was an inside day. This was a new day up. Now we have some timing coming in here, right? This is basically Thanksgiving, I believe. So kind of a holiday as well. Kind of had a little bad day on the opening and sell off, and then it closed basically higher than where it opened. So intraday breaks on fast markets is all you get normally. So I'd be pretty bullish on that close. Made another new high, an inside day. So again, it didn't go lower here, right? I mean, if it was over, it would have, and this was some type of high, these basically 6 would have probably dropped down here, right? Not up here, made new highs. So once again, we made new highs. Again, gap up, another gap up. This market is acting extremely strong. Definitely not weak at all. And that's what I would expect, right? I'm bullish AI, and IBM is a sleeper from the price structure it was at. And you can see this is an inside day and 1 day down. So again, only so far 1 day down. I can't draw a negative line yet. And I believe this one was a day down, 160.01. Yeah, this was a lower high, lower low. This was a lower high, lower low. So we can officially draw in our first swing, right? Now we didn't have any through here, which was interesting. And you can see that we had a couple in here that was an outside day up. I'm going to go ahead and draw. I don't think it made a new low, but I'm going to go ahead and draw it over here just for pretty sake. And then we did go 2 days higher high, so we and made new highs. So again, the trend is still live. This is your corrective zone, and this is all the correction you get. That's telling you to be awfully cautious if you're short, right? I mean, that's all the correction you had was basically inside the range of 2 days. So pretty bullish. Now this is down. Again, we had new highs, a day down, 2 days down. Now the close is pretty bully, so pretty key there, right? So we can draw this down. We had timing in here, and it took it out right away, but closed crappy, but still a higher high and a higher low, so one of those. Now it negated that. Currently, this is December 19th, and you can see we had lower highs and lower lows, but still inside this range, so you do not draw it over, obviously, because it has to make new lows. Now it's made new lows, so we can go ahead and draw this over. And I would assume, right, that the market's going to take these areas out, right? It's just too easy not to run them, because it's just a minor correction. I mean, what is that? 3-4%. I mean, geez, that's just nothing. If it would take that out, 5% correct, 5% corrections is down here. So I'd be a buyer of that if I'm a bull like I am. But again, you wait, right? You just don't do it. So I'll just pull this one down. So we got timing in here. I'm looking, and it did run the stops like I thought. So again, I would be a buyer here at 162.50. The tendency's been to gap, but I'm going to wait for the 2 day. Now again, we had 3 of them coming in, and it was a gap up again. These markets are powerful, IBM in particular. So again, we can't draw it up yet until one more day. There's your 2 day. Now, if you remember, last time we did this, it gapped quite a bit higher, right? So you got to be a little cautious, and I would be in here buying calls if I'm a bull, because we ran the stops. If you buy the actual stock, now your stops go below here, or you buy this, let's say 100 shares and buy one put at 159, right? That's your risk point. I don't think you got to risk it more than 2 weeks. So again, another day up. We'll just drag this one over. Another day up. So and you can see I have this. This is I think it's mathematical. No, I forgot to delete that one. Sorry. So we had a 3.5% correction off a major high, and we've had a little running correction here. We had an outside day with timing, and so I drew this trend line in. This is our first day down, right? So we can't draw it down yet. Now we have 2 days down. The only negative is, I guess positive, is that the 2 days didn't knock out the low. There's a 1 day up. There it knocked out the low. So now that completes that bearish correction, kind of an ABC if you're a fib guy, or Gann did that as well. Use the 1, 2, 3 methods. But you can see we got this. Now we got some resistance, acting a little bearish. Now we've probably completed a 5% correction, maybe. Not quite, almost 5. So we'd be looking for another decline. We had timing in here, and it did gap down, right? So this is a gap in market. And of course, there is your maybe what I call the puke stage, right? And there is your 5% correction. That's got to be kind of friendly. The outside day, I had no timing in here. This is January 8th, which was last couple weeks ago. Again, we don't get to draw anything. There's an inside day. There's our first day up. There's our 2-day up. So again, we know now that it's completed a 5% correction and pretty good time, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days. I like 17. That's part of the Gann wheel. You know, that's your irritation zone on the Gann wheel, right? So 17 days completes this, which is what, 45 days or I guess, you know, whatever. Anyway, this is pretty important, right? And again, we know that it can gap. So I'm assuming if it's bullish, we're going to gap through this trend line where the public is at some point. And we did. We gapped up. It did travel back down. We had three, and again, we knew there was 3 zones coming up, right? So, and again, we know it's been gapping and didn't gap and made new highs right away, but still pretty bullish. The shorts are screwed, probably scrambling for the hills. And we did make a new high. It didn't gap that day, which is the 16th. Another day up. I'm dragging these instead of putting new lines on my chart. There was a 1-day down, but it closed higher, so we had actually a higher close. A lot of times on bully markets, you only get 1-day breaks. And there was your gap again. This was the what day was this? The 19th. So this was Friday, and this is today. So again, you can see that the market has completed its move. We had a zone in here, and I did run these out. Not much here in the near future. So let's squish this down and take a look at it. This was a day by day, right? So this was a major swing, obviously. This was a major swing, obviously. So we've had, you know, breaks that were getting shallower. This was your longest one. This was your base, right? For every action, there's an equal but opposite reaction. Newton's law, right? This was a bear trap, punched out lows, spike low, so I'm expecting a spike high whenever it does occur. Now, you know, looking at like Apple as my data point, you know that these markets tend to have corrections, right? Some of them pretty steep. Even though Apple's a new highs here coming into the end of this 2013, it wasn't without setbacks. I mean, it had 50% drops and 3 5-year declines. You know, people forget that, right? That's why the charts are important. But as you can see, these data points help you kind of know where to put stops if you don't have the money to risk. I mean, all right, you buy it here and the new swing high, you got to risk here. I mean, most people can't trade like that, right? I mean, that's, you know, for the big guys maybe. You know, you buy a new high here, you risk here. I mean, you know, you're risking, you know, $15 or something. So, but this shallow decline, this ABC correction, kind of relieved the pressure on all the people that trade stochastics, RSIs, ADXs, stuff like that. So it eased the pressure off there. So, and you can see that this first leg, I'm just doing a quick little math here. Was 22.5%. So if you go up 22.5% off of this low, the projections would be not percentage-wise, but the actual distance, right? Puts it up to 188. And I would assume that if it took let me go market days here. If it took 35 market days, I would assume, and you can see it's held this speed, I would assume it's going to be twice as fast. So around 17 days. Again, we know this correction was 17 days in length as well, right? So this makes more sense to me. It's going to run this speed up 188. Now, again, that's all guesstimate, right? When you trade a 2-day trendline indicator, you don't even worry about that. Now, at some point when it gets really flying, you got to, I believe you don't just wait for the 2-day break, right? I mean, you have to assume some type of high. And that's a nice thing for people who can trade multiple contracts, and why I like options, right? You know, you could have bought calls right here, or even waited and bought calls here, right? You can buy more than one, and you can get out of them as it goes up. But anyway, so that's the 2-day trend line indicator with all the data points on IBM. I've taken up my 30 minutes. I'm going to let you go. Thank you, and have a great rest of the trading week.